Well, welcome back. Today we're talking about life insurance, something that most people try to avoid in a lot of ways. And the reason I thought this topic would be interesting is because I was asked recently my own opinion about term versus whole life. And, I thought I'd ask that question to you. Which do you prefer? Why? Everybody seems to have a opinion. I talked to some people and they're very aligned to that term life. Get it? That's the only one you can do. And then I have other people on the other side about whole life, and that's the only one you should do for a variety of reasons. So again, today that is our question. So again, put your notes down in the comments. Love to see that. Curious what other people are doing. And if you're not subscribed, I'm just sharing my story and, things that I believe in. And so just curious to have a conversation. So let's jump into it. I thought I'd share really when I got my life insurance, I knew nothing about it. It was really something that really wasn't thinking about. I probably had something through my work. Again, a lot of companies give like 1 times your salary. I'm sure I was doing that. I was probably buying it 2 times or 3 times my salary. They allowed you to do that up to a certain dollar amount. Maybe my wife was doing that as well. But I came to the decision that we needed life insurance because through different experiences, right? I had a house. I was looking at, I'm going to share my numbers below, so you're going to see that. I probably had 1 kid, maybe was thinking about having another one, assuming that I'd have to pay for weddings, colleges, and stuff like that. And so that's really the whole reason I decided to get life insurance outside of work. There was an incident where, we had a young gentleman that had a medical condition and had to leave. And really that, weighed on me because I'd always had life insurance through my work, and through that situation where they kind of encouraged him to leave, I thought, well, what if that, happened to me? So my life insurance is valid while I'm working, but as soon as I leave, it is gone. So I wanted to get something outside of work. And so I started talking to different people. And I had one person that was like, hey, whole life's the whole way to go. You got to do it. It builds cash value. You can take a loan against it. And that's usually the comments that I hear from people. And then there's the term insurance that I look at. Term insurances, you can get a big amount. Typically term insurance is much cheaper and whole life is much more expensive. And I'll show you again my numbers. But so I went back and forth on what I could decide and what I could get. And again, so let's go into exactly what I picked a little over 20 years ago. So this is my policy, and you'll see here that in 2004, I had gotten a $1 million policy, a lot of money, obviously, and it was a 20-year term. And you can see here that I was paying about $850 a year for the 20 years. So it was $17,000 total. And again, I look at term insurance as kind of like car insurance. You use it, you don't use it. It's really around in the event that something happened, that money would have gone to my wife and she would have been able to pay for, our kids' expenses, the house. And that's really what I was trying to protect, was if something happened, she was okay. But before I go on, let me just make sure I highlight that if you don't have expenses or you don't have commitments, life insurance is probably something you can skip. You really don't need it. If you own a house and, something happens to you, it's no big deal. It's more if you want to protect somebody else beyond you and that. So that's why we had gotten it. So this is what I got. I got a term, and I'll show you why I picked a term. Again, it was $1 million policy for $850 a year. Oh, before I go into what I could have picked or why, you can see here, it can keep going. So after the 20 years, the $850 premium stops and it actually starts increasing per year. So I could have kept it, but the problem was as soon as I stopped, it would have went up to almost $12,000 for the first year of premiums, then almost $13,000, then a little over $14,000. So it really didn't pay. And my whole purpose around this was I was going to put money aside, so I really didn't need life insurance. Again, that was the theory around only 20 years to protect it. It was really to get my one child at the time, into college, and hopefully we had saved enough and didn't need it. Again, I'll touch a little bit on that, a little on what I wish I had done. And again, could have gone all the way up to 2061, and you're paying almost over $500,000 in a policy for a $1 million policy. Again, it didn't seem to be that valuable at that point. So that is what I did, and here is what my wife did. And you can see we got a whole life policy for her. Again, probably got the whole life policy primarily because somebody was saying you got to get a whole life policy. It builds cash value. But when you see how much a whole life policy costs, I realized I couldn't get $1 million whole life policy and be able to pay those premiums. So here, only $100,000 premium or policy, I was paying $848 a year. So $2 cheaper for 1/10 of the value. So that is why I didn't go with a whole life policy. I didn't feel like I could afford it. I mean, to get a $200, $300 policy, I would have been paying $1,600, $2,400, $2,500 a year. And again, I just didn't think that was the right choice for me. So you can see I was paying $17,000. Here, my wife was paying $16,960 a year, again, for only 1/10 of the amount. And again, let me show you the one thing that a lot of people like to point out with a whole life policy is you are building cash value from it. So it does build up, and then you can get that cash value out. And again, we recently cashed it out, and I'll explain why. But after 20 years of paying $848, you can see we had paid almost $17,000, and the cash value was just over $19,000. So here you can see the policy and loan value. So, if I had kept it and continue to pay it up to 2038, it might be worth $40,000. So this is why a lot of people like whole life policy, or what I've heard is it builds value and you can borrow from it. Now, the reason I don't really find that a valid statement is, again, it took 20 years to barely make $20,000 in cash value. It's not like you can go borrow from this to buy a car or something. So again, I'll explain what I probably would prefer to do. Even again, after 30 years and paying almost $30,000 in premiums, the cash value is just under $35,000. So really not making a lot of money. And again, it is $100,000, so it's a decent accidental policy. But it wasn't going to probably be life-changing, that's for sure. So I recently went out and I got 2 different estimates. So I found a website that I didn't have to put in too much personal information, and I was able to kind of guess here. So I took a 25-year-old with a $500,000 policy for 25 years. So not the 20 that I was doing or what I was planning to do. And you can see here the premiums are only $23 to $46 a month. So fairly reasonable premiums for a $500,000 for 25 years. So again, that shows you the value of doing it, a term versus here's the whole life policy. Very similar to the metrics. The only thing I changed here was it was a whole life policy versus a term. And you can see it is now $351 to $369 a month. Very, very different dollar amounts. So going back, or after the 20 years, I thought, is this the right experience, right? And so one thing I do always want to say that, when I got the life insurance and then through the whole, pretty much the 20 years, it gave me 100% confidence that, God forbid, something did happen, that I was covered. I would have gotten $100,000 and my wife would have gotten $1 million. So it definitely, the confidence level was there. And you can see here, after 20 years, we had paid in about $34,000 in payments, and the cash value was almost $20,000. Now, looking back, probably both life insurance policies were off. Only $100,000 for my wife probably wasn't enough if something did happen. But obviously $1 million, I was looking at, our mortgage, weddings, loss of the income, being able to pay for things. And probably $1 million was a little too much. But again, that's what I did. And I didn't factor in that, if I had taken that money, or my wife had taken that money, she could have invested it and maybe it would have grown to $1 million or something like that over a period of time. So I probably wouldn't have done $1 million at this point, looking back. Ideally, I think I probably would have done about 250 for each of us, considering that life insurance premiums aren't generally taxable. So that's probably what I would have done. And comparing that to what I probably could have done or should have done was, again, here's those same numbers, right? I paid $33,000 or almost $34,000 in, and I only came out of here with, about 20,000. We did cash it out and rolled it over to something else. But if I had decided that both of us would have gotten $250,000 policies, and basing it off of my policy, which was $850 a month at $1 million, that's $70 a month. And what I did was I took 25% of it, which is $250,000 instead of the $1 million. That's $17, and I times it by both my wife and I. Our premiums should have been about $35 instead. So if we were paying that, and I wanted to be very conservative, right? If we rolled that up to $40 a month, we would have paid $480 a year, which over the 20 years would have only been $9,600. And instead of, knowing that we would have paid $1,698 a year, if we had taken that extra money and invested it. So that's the whole key that I think is, a lot of people look at life insurance as, I'll pay it in and if something happens, I have all this money. I want to have life insurance for as few years as possible. So I'm protecting myself, and then I'm trying to invest a lot more, so I don't need life insurance. And so, if I had invested $101 a month instead of putting that into my premiums, that could have actually grown to $60,000. So, and again, obviously that's with $250,000. Probably would have still given my wife and I same level of confidence. We would have paid less, and we'd actually come out with 3 times the amount of money. So that's what I wish I had done. Now I'm going to use Dinkytown's calculator to kind of prove that out. I'm going to do that $101. I might roll it up to 102 because the tool doesn't seem to like decimal places. And I'll put this link down below. You can do your own comparisons. Go out, and before you get life insurance, take a look. Get the premiums for a term, get the premiums for a whole life, compare it. Make sure you pick the right value. Again, I think our values were off a little bit. And then maybe take the difference, right? And invest it and see what you could have came out with. Because I really do think that maybe we should have done that. And, now looking at my experience, again, it was after 20 years. We did recently cash it out, and we took that $20,000 and we're investing it. Was 20 years also the right number? Looking back, I will say that I wish I had done 30, only because we had, we got this when our first child was born. It's been 20 years and she's still in college. We've had a second child, and that one is just about ready to go to college. So 20 years probably wasn't enough time. I think the dollar amount of $250 probably would be more than enough. But the time period of 20 years probably was a little short. We had thought about doing 30 or doing 25 or something like that. I can't, it's been so many years. But looking back, I probably would have done a 30. So we did cancel our current policies, and we actually added on another 10 years. And then the plan is to no longer have life insurance at all. And we got a much smaller dollar value. So just, I do like to say that this is really just for more entertainment, my experience. Take it as you wish. But again, I'd love to hear your thoughts below. So let's look at Dinkytown. And so I like these calculators. They're great for showing what if scenarios, and you can run it for different amounts. So if we had started with nothing back in 2004, and again for 20 years, and I like to use 8% return. I think you could do 10. I think you could do 7. A lot of different returns. I like to do an 8. I think that's fairly conservative. I'm not trying to get too aggressive, but not too conservative. I'm not going to put like a 5% in there either. So, and if we had taken that 100 and 150, and I will say again, the frequency is per month, compounded annually. That's if you're investing in stocks. It does roll up, I did notice. So you can see here, after 20 years, you could have close to or a little over $58,000. So again, we still would have been protected. And then at the end of the 20 years, we would have had $60,000. Now, if I had taken this and actually done what I think I probably should have done and actually done 30 years, and let's up that to 30 years, calculating that out, we would have close to $145,000, which after 30 years, and again, if I had done this at right around 2004, so it's been about 31 years right now. So even if I had considered not saving another dollar, so let's say we at the end of the 30 years, we didn't need life insurance, we let it go, we have $144,000 or almost $145,000. The kids are out of the house, maybe the house is paid off or whatever, you could pick the number of scenarios that you want to go into. And let's just take that amount and invest it, okay, back into this tool. We're going to do at 8% growth. And we're just going to leave it in there, not for 30 years, but let's say for another 10 years. So you're just taking the money that you would have already had, investing it for 10 years at an 8% return. The frequency is zero. We're not adding any additional money to it. So it is $312,000. So that's probably what I wish I had done versus, here, I'd actually have more than the life insurance values that I was originally looking at. And again, this could continue to grow. Add this onto your existing savings. And I think this would have been a much better choice. Again, let me know what your thoughts are. So I hope you found this kind of interesting. Are you looking at life insurance? What would you do? Are you still a believer in term life insurance, or are you a believer in whole life? Again, everybody kind of has different opinions. But again, I do want to kind of highlight, I think, again, life insurance is kind of important. But again, understand, do you really need it? So if you don't have any expectations, and again, in another 8 or 9 years, because we did renew it not too long ago, or within the last year plus, I think it was, I plan to stop it and I won't need life insurance because I'm hoping that my investments is enough that it'll cover anything else that we would need. So I won't need life insurance when I'm in my early 60s. I don't think I'll get it again. But at that point, the premiums probably would get much higher as well. So again, I hope you found this interesting. Let me know if you like this and what your thoughts are. I appreciate your feedback. And then if you did like this video or you stayed through the end and you want to see one of my other ones, look up here. They should be dropping in. So thank you very much.